So, these particular workshops, as I said, we've been doing them for a while. They've become very popular. They have earned a very good reputation for presenting what can sometimes be complicated material in a very understandable way in a 3-hour time frame, which means you're not spending days of your time driving to Burlington to go to a $500 conference. So hopefully you will learn something today. I'm going to introduce you to both Deb and Julie, who are from Marckres Norder, which is, I think is safely be described as the preeminent CPA firm in the county. I'm going to let them talk a little bit about themselves, their background, and then we'll get things going. Oh, one thing. The restrooms are in the corner over there. There are donuts and coffee back there. There's a kitchen fountain, and there's also a machine that has water if you prefer that.
My name's Julie Marckres. I've been in public accounting for 25, 26 years. Deb and I have worked together for 21 of those years, and Lisa LaFaux joined us this year. So we are 3 of 8 accountants. We work right here in Morrisville. We are mostly a tax office where we work with small businesses. We do some compilations and reviews as well. But mostly we work with small businesses, consulting, doing their tax work, financial statement setup, QuickBooks setup. That's it.
This is Deb. So I'm Deb, and as Julie said, this is where I came right out of college, so I've been there 21 years. I'm originally from Maine, and we work with a lot of small business, a lot of sole proprietors on the individual side, and also with nonprofits and different things with helping people with QuickBooks setup. They can give us a call to say, oh, I'm stuck, how do I do this in QuickBooks? We'll help you through that, and doing the tax returns and those things, and really just kind of, as you build relationships with clients, kind of what we offer and can do to them kind of grows as the client's business grows or as their individual needs change.
So what we were thinking is to start off trying to get an understanding of what you guys are looking for today. We're hoping that we're not going to be talking at you and that we can answer questions and progress through this program at a speed that you're comfortable with, faster, slower, you tell us. So if you would just take a few minutes and go around the room and introduce yourselves and let us know what company you're working for, if you're already using an accounting system and what that system is, so that we have some sort of idea of where we're starting. Kathy?
My husband and I are going to be starting a small business. I've never used any accounting. I have no idea what I'm going into. I got to learn.
Okay, good.
My name is Nicole. I work for Meals on Wheels, the executive director. Finally meet you. So I'm new to that program. I use Sage 50. I'm new to that program as well. So just looking forward to learning anything I can to,
What was the program you used before Sage 50? Or did you come from a system before then?
Did not come from a system. Yeah.
Okay. Jim?
Hi, Jim Bose. I'm with Bose Environmental. I'm a geologist, and I just started my own firm at the start of the year. I bought QuickBooks, and I can track my time, and I can bill, but I know I'm underutilizing it, so I'm hoping I can find out a little bit more.
My name's Tracy. I'm with the Smugglers Notch Homeowners Association. We currently use QuickBooks, and I'm here to see if maybe we should be using something else.
Elisa Clancy, 3W Promotions. I do websites and internet marketing. And I used QuickBooks software for a long time. I just switched to QuickBooks Online, and I'm just scratching the surface of it.
Hi, Joe Courier. We have a small forest products business, and we don't use QuickBooks. We're looking to do that, though, so that's why I'm here.
Lawson. I used to own a women's boutique in Park City, and I did not touch my books. I didn't even really know how to read a profit and loss statement. So I'm hoping to open a new business, and I'd like to go in being completely hands-on this time.
Christy O'Coin. My husband and I manage a farm, Blackwell Roots Farm in Cabot. And I also did books for a small private school, and we're using QuickBooks.
My name's Rose, and I run a business in Montpelier that's physical therapy and Pilates. And my husband and I opened the business like 9 years ago, and my background is dance and movement education, but I am the bookkeeper. So I've been just doing the bare minimum with QuickBooks Simple Start, and my accountant on Montpelier, Robert Pace, is a huge savior for me. But I'm trying to get better at this job that I do that I really am not trained for. So I'm especially interested in creating a budget for our business and better utilizing the QuickBooks that I have, or maybe switching systems. I do my own payroll, but it's all on paper. I have multiple systems that I underutilize, so I have a lot to learn.
We better talk fast.
My name is Jess. I do the books for my husband. He's got a heating and air conditioning business, and we use QuickBooks Pro right now.
My staff is staff area management. We're consultants for the design-build industry. I basically use a spreadsheet. I have QuickBooks. I tried using it the first couple of years. I didn't find it very helpful, so I built a spreadsheet. I have about 4 employees.
Hi, I'm Lisa from the Recovery Center, and I also have my own business, which I still do with a pencil and ledger. And I've done that for 30 years. So that being said, QuickBooks is kind of hard for me to learn. I'm looking to simplify things. It's way too much. So that's and budgeting and stuff like that.
I'm Sherry Cornish. My husband and I have a retail business in Hardwick, and my background is in everything but bookkeeping. So I purchased QuickBooks, but I've never embraced it. I mostly just am dealing with spreadsheets and trying to keep my head above water, do everything right.
And we had 2 new come in. Hi, Kate.
I'm Kate. My husband and I learned for the Payroll in January, and I am an artist, so I'm doing books. We're using QuickBooks Online, and it's been a learning curve.
I'm Michelle Roush, and my husband and I just opened Roush Family Chiropractic in Stowe, and we're working together, and I am a guidance counselor by trade, and I am doing the book, so we're both in trouble. But yeah, so I have QuickBooks, but for Mac, and it just isn't, it looks like it's more of a home thing versus a business one, and so I need anything you got. Because I don't know if I can make that work for the business.
We have clients that use QuickBooks for Mac, so there is absolutely the business component. I'm not sure if there's something, what you're looking at. Unfortunately, we didn't bring Mac today. Of course, we're PC mostly. But it's something that I think you could probably pick some stuff up from what we're going to talk about QuickBooks. And then maybe I do have some cards, and I'd be happy to meet with anyone individually for an hour and just see what I could help individually too. That's fine. You guys. Good morning.
Hi, I'm Jeff. This is how I can we are property managers and do home inspections and stuff like that. We really have no good system at all. So we're here to learn what system might work for us guys. Okay.
So I will say the majority of our clients, probably 99%, if they're on a computerized accounting system, they're using QuickBooks of some sort, whether it be Pro, Premier, or online. Having used QuickBooks for 20 years or so, maybe, When we started to get clients who are on the QuickBooks Online version, it's a steep curve because you get used to something always being the same, and then all of a sudden you have to learn something different, which we should be used to that, but we get stuck in these ruts that we go here and we go here, and this is where we expect to find it, and the systems change, and then you have to learn where to find it again. So it really sounds like the majority of you are probably using QuickBooks. Some of you are using just the pen and paper, which is fine. We'll briefly touch on that. Going to hope to move into looking at the QuickBooks from the paper to an Excel over to QuickBooks. Probably spend the majority of our time looking at some options there. And then you'll notice when we switch over to Sage 50, which used to be Peachtree, it's going to look a lot alike. There are going to be a lot of similarities, which is where they want people to be able to find, if they knew how to write checks in QuickBooks, they want them to know how to write checks in Peachtree or Sage 50 as it is. So we have given you some handouts. I have some cards. If you have questions that you got home and you want to email me a question, I'm happy to take questions. Call me. If you want to meet, for an hour together, I'm fine with that to get you guys started. That's just fine. So basically, I don't know where to stand, so I'm just going to walk around. Why do you need an accounting system? Businesses really need to make decisions with information that they have available to them. If you are not running your business with any information other than what the balance is in your checkbook, you may or may not have a business that's going to last a long time. If you're looking at the balance in the checkbook and you have $10,000 and you think, oh great, we've got a $10,000 profit. Well, you might have a $20,000 profit because you might have taken $10,000 out personally. So running just a check register and knowing what's in your checkbook isn't really going to give you the information that you need to keep a long sustaining business. You can prepare financial statements. You need good records to prepare your financial statements, whether that be a balance sheet, a profit and loss. All of this takes information that you can keep in your accounting system. One of the benefits of an accounting system, when you are tracking your receipts, if you do take out a loan for $5,000, you will have that in your accounting information as a loan and not as sales. So identifying receipts, the source of the receipts, is very important, especially when you come to year end, you're preparing your tax return, and you don't want to pay tax on a $5,000 deposit that was a loan and not income. Keeping track of your expenses. If you're putting everything in a shoebox, at the end of the year, you're just going to dump the shoebox on the table, and you're not really going to have a very good day. Keeping track of your expenses in a way that you can look up what's in your rent expense, what's in your office supplies, and at any given time what you've spent is very important. Leads to good tax returns. If you have good information, you have valid backup for what you are reporting. The shoebox would work. It's going to take you a long time. You're going to have to total all the receipts. But if you did keep your ledgers, even manually, you're going to know at any given time what you've spent where.
Do you mind if I interrupt you?
No, I would like everyone to interrupt me anytime.
Well, only because this was like the bane of the whole thing, was like expenses. And when I just switched to QuickBooks Online, I was doing the software on my computer. You can connect your bank account and your credit card, and it will put all the expenses in there for you. You just have to decide what category. It's changed my life, so I just wanted to say it's so helpful to not have to enter them.
So I don't do that, and it scares me really bad.
Yeah.
And part of it is because it's happening out of my control. And part of it is because I feel like there's a chance that if I'm not the one entering, I'll stop paying attention. So I'm interested in how that works for you.
It can learn, that GoDaddy is web hosting. It can learn that, and you just have to accept it, or you can look at every single one of them.
You can match transactions. I'm a little bit on the conservative side with you, saying sometimes it's easy to download twice, sometimes 3 times, and then when you come to reconcile, you have this many items that are in there twice that you have to unmatch and discard or exclude, I guess is what. So there are definitely benefits, but there are also costs that you have to be aware of that QuickBooks isn't going to run your company and know everything. You have to be aware of what's being put into that account. And when you reconcile, which we'll get to, there's a place to accept and discard and exclude and to go from there. But it's better than the shoebox. It is better than the shoebox. It is better than the shoebox. So, and again, to support the items that you're reporting on your tax return, you keep good accounting records. It's right there for you at any given time.
I mean, and the other thing is and from our standpoint, I've had the laundry basket come to my office. And from a cost standpoint, it's a lot cheaper for you than us to sit at it. But I've had well, here it is. Okay, but that's great, but it's going to cost you a lot of money for us to figure it out. And
we would rather help you get it straight.
But your year's done, so you also if you're not knowing where you are, like Julie said, at the end of the year, you could have a much bigger profit. And I've had people say, well, I don't have any money in my checkbook, but no, you don't, but you were paying back debt, or you bought some equipment, or you're doing other things that weren't direct write-offs that year, that you do have a profit, even though there might not be any money in the checkbook.
So keeping records is very important. Couple different accounting methods that you can use, just briefly. Cash method. Most of our small business service industry related people are cash method reporters, meaning if you provide a service and you provide the service in December but you don't get paid until January, that's when you're going to report that income, same as expenses. If you get your light bill for December but you're not paying it until January, that's when you're going to take that deduction. So the flip side of that is an accrual basis reporter, where if you have inventory and payables, you're going to report that income when you create that invoice for that product. If you sell XYZ widgets and you sell $1,000 in December, but even though you don't get paid until January, that would be a December income for you. So you would see that on your profit and loss and your balance sheet. Okay, things to just consider. How big's your business? What do you really, I'm sorry.
There's 4 periods for filing taxes.
Quarterlies, yeah, when you pay your taxes, okay.
Well, you said quarterly, but the first period is 3 months, the second period is 2 months, the third period is 3 months, and the fourth period is 4 months. So guess which period you earn the most money normally? And if you're in retail, I don't know how you do, but got half your income in that. And then if you didn't report your income, if you like, on a quarterly basis and guess right for the 2 month and the 4 month one, how do you do that? And then they want to ding you and charge you because you didn't pay enough early enough. How do you say, if you can prove to them that you got this much money at that time,
you can fill out
which
a
is
worksheet.
easy to do.
Right, you can fill out the worksheet and attach to your tax return to see what your annualized income was for the first 3 months, the 5 months, the 8 months, and the 12 months.
Okay, so, all right, I don't know where's that form?
It's the 2220. When you do the 2220, the penalty form,
Okay.
when you look at that and you actually have income that hits sporadically in different periods, you can go ahead and annualize that income and you'll see what the payment was required. And yeah, as long as you submit the form, you're okay.
I mean, the same thing's true if you take, I'm over 70, so if you pull down your, if you're pulling out of a 401 or a IRA, if you get that in one lump sum at one point, it's going to make a huge difference.
Absolutely. But if you fill out that worksheet, that's...
Okay, Form 2220. Thank you very much.
2210. 2210, 2220. One is the... 2210, 2220. I don't know. It's been, the over 40 brain, it's in that direction.
All right. Thank you.
You're welcome. So if you are using a computerized system, do you need an industry-specific accounting software? Is there tech support out there? Are you getting a company from, that only has 3 people that are going to answer their phones and they're not going to answer them on Tuesdays? And how much the software costs? So there's things to consider before you jump from a manual system into a computerized system. And another one I should have added is, are you computer literate? Is this going to cause more stress than it's worth switching over to a computerized system? The next chart is just showing you 95% of the businesses are classified as small business, less than 19. And I would say most of our small businesses are either micro or non-employing. We have a lot of small businesses. Okay. All right. So some of the features in an accounting system, separation of income and expenses, accounts payable and accounts receivable, financial reports, a balance sheet, income statement, time and billing, budgeting, payroll, inventory, purchase orders. You can start by having a very small, simple system, and you can add on as you grow. You don't have to start large. Many times I'll tell people, let's just start with putting your checkbook on, and then let's move to invoicing, let's move into payables, just so that you get comfortable with the program before you dive in and hate me. Okay. Some of the industry-specific accounting software that's out there, I think this comes from the QuickBooks website. General services, to track balance sheet, profit and loss. You can do it by class. Let's say you're a landscape company and you want to, you do a lot of ponds, and then you do a lot of lawn mowing, and you do a lot of, I'm not sure, or whatever. You can actually set up and track your income by class so that you could see what's making you money and what's not. Nonprofit accounting, they have year-end donation statements, manufacturing. The QuickBooks Enterprise allows you to build assemblies. So take raw materials, create a product, move it from raw materials into inventory. Contractor accounting, profit and loss by jobs. You can track by customer what jobs you're doing, how much money you're making or losing. In retail accounting, tracking your inventory, whether you use a point of sale system or not, and being able to track that easily. Again, is there adequate support out there? What do you need for support? What's going to be available for you? And the cost is not only the $300 that you're buying a system for. You're going to pay for maintenance, the IT. Do you need an IT specialist, server, the workstation? All of that stuff adds cost to the program. Yeah, sure.
Do you need the software first, even if you're doing the online and paying? I saw something that you can do like a $40.
Yep, online is online. They host everything. You just pay the monthly fee and you log in and it's there.
And you can use iPad, or you can use iPad even. iMac.
The mobile apps. The mobile, yeah. As long as you can log into it online, you're good.
The iPad app is really not great.
But you should be able to even use your right in through the browser.
Oh, okay. But on your iPad.
Yeah, as long as you can get to the internet. Whereas, some people, I have clients that like the online, and I'm getting there. It's just I've been on the desktop for so long that I'm getting there. But, like Lisa said, you stand in their driveway and you do their invoice, you've got a mobile printer, or you email it to them, you're done. Well, the customer gets the bill when you're done.
So when you're talking about the online, so this is, are you specifically talking about the QuickBooks? Is that QuickBooks Online versus the CD that the desktop version? Okay.
Yeah. Which you can log in online for the Mac as well.
For online. And how is that different from the CD version?
It looks different. To me, it feels clunky. but it has the same features. Online, yeah. Just because, again, I've done the desktop version for 25 years or 20 years or whatever, so that just that change seems like there's more steps. So for instance, when you go to print a report for online QuickBooks, you always have to change your dates and then hit Run Report. Well, when I change my dates, I usually think you're going to run the report for me. I really, really want you to change the dates and then run the report. So just those things that it's personal preference.
Are they still selling the desktop version? Yeah.
Yeah. They would love to push everybody to a subscription-based online into it. Right now, if you're doing payroll with a desktop version, you can keep the same QuickBooks version, I believe, for 3 years and just update your payroll subscription every year. But the program itself, if you bought 16, would be good through 19. And I'm not sure how long Sage.
Do you have to buy a QuickBooks update every so many years?
If you do payroll, it's every 3 years. If you don't do payroll, I still have people running on 05.
Yeah, I got some people running on old versions.
Like 2010 would work.
Oh, 10 is fine. Yeah, I think I really think I have an 05, and it may even be older
I have
than
an
that.
08, I think.
Yeah. So as long as you're not doing payroll, you can keep that program, as long as it's stable. There's no support out there if there's a
Are we
problem.
missing anything with the 2010 versus 2016?
They always add, they're always enhancing, making more bells and whistles, but I mean, it's doing the same.
When you say as long as it's stable,
If your computer crashes and you call Intuit for support and you have a 2005 version, they're going to say, sorry, we don't support that, because they only support it for 3 years. So make your backups every night, every day you use it. Okay, so we're going to get...
This is getting more and more comforting as we go.
I've had a client in the last few weeks, and they had an issue. So, okay, so yeah. So basically, we all know what a check register is: check number, date, transaction description, payment, deposit, and balance. You can run totals. Yeah, From that point, this is basically your personal checkbook. You can run a business this way. At the end of the year, you're going to be ticking and tying to get to your totals of how much you paid for repairs, how much you paid for rent, how much your income was, whether it's sales or whether it's a loan, or did you put personal money in, did you sell some stock and needed to contribute money. So again, it can be done. You can keep good records manually. That's not a problem. If you don't want to jump to the computer, there's ways around that, but it's just going to take more time to get to a report that would be helpful for you. So the next one, back in the olden days, we had the, 18-column check registers, and you folded it up, and you tried to make copies. So here you would keep your, the check written to, whether you have a payroll section, the amount, the check number, your balance. So as an example, we've only put a few up here, but you'll see you keep your running balance, your deposits, what expenses they are, office supplies, materials, rent. And as you see at the bottom, you can total the page, and then you always make sure that you're always carrying it forward so that your expenses manually are kept track of every month. So every month as you advance, you have your manual system, so you know you've spent $300 on office supplies. You've spent $2,200, I'm not sure, whatever that number is, and $7,500. And so you're always tracking those expenses so that at any time you can open your last checkbook page and say, okay, I've spent $300 on office supplies this year. I have a pretty good understanding of what I've spent. You can do it manually. Always proof. If you're doing things manually, always prove your cash balance. When you start with your beginning cash, you add your deposits, you minus your disbursements, you should come up to ending cash. It's an easy way for you to make sure that everything that's been recorded is accounted for. If your ending cash, if you do this and your ending cash shows you a negative $3,000, but you're supposed to have $4,000 in the checkbook, somewhere there's a $7,000 mistake. So it's an easy way to just double check. And then the importance, of course, of balancing your checking accounts. Overdraft fees are expensive. If you find a problem, you can handle it immediately. Merchants make mistakes as well. Checks go through at 500 instead of 50. I think there's only a certain number of days that you have to catch that mistake. So you want to make sure you balance your checking account. Online banking is handy. You can always look at what your balance is, but online doesn't know how many outstanding checks you have or deposits in transit you have.
Okay, I'm going to risk sounding really stupid.
Not at all.
But I'm going to do it. This is the place to do it. So I am not totally clear on what actually you mean when you say balance your checkbook or reconcile. So I have my ways that I keep track, and they work pretty well. But I don't have a moment every month where I'm like, reconciliation has occurred. And so what would that look like if I did? What is that moment? And maybe that's coming up in your...
By the way, that's a great question. We do that every month. As we add our organization box.
Yeah. We're going to get you convinced to at least get you the files. Yeah, we'll get you some manila envelopes at least to get them coded. So when you're looking at the bank statement that comes every month or online, okay, you're looking at what the bank has for a balance as of January 31st, okay? You're comparing that after you've checked off your deposits that match and your disbursements that match. You're comparing that balance on the bank statement to what you have in your checkbook. So, on the back of the bank statement, you have outstanding checks or deposits in transit that you expect to balance to clear the next month. QuickBooks, and I'm sure Sage does, when you do it on an accounting program, basically you open up your bank checking register and you go banking reconcile. And when you reconcile that, it's going to carry forward your last month ending balance as your this month's beginning balance. And what you're going to do is, again, instead of manually checking them off, you're going to check them off on your QuickBooks. And at the end, at the bottom, you're going to have 0 discrepancies or 0 differences. And when you accept that, you're going to print the report. And we always print it in detail. And then you can look at the uncleared transactions on that QuickBooks report, which would be the same as the back side of your bank statement if you're doing it manually, to see what's outstanding. I will admit, during tax season a few years ago, I had made an EFTPS deposit online, did payroll, blah, blah, blah. The electronic funds transfer payment for the 941 deposit on irs.gov or EFTPS.gov. So I'd made that deposit on QuickBooks, knew in my mind I'd done it, but it never cleared the bank, which tells me when I went back to look at the sheet that I always print, because I'm a paper person, old like that, it wasn't there. My receipt wasn't there. So in my mind, during tax season, I did my deposit, I did it on QuickBooks, but I never hit the confirmation so that it took it out of the bank. So as I was reconciling my bank statement, I'm like, why didn't this 941 deposit clear? So I opened it up, and sure enough, I didn't do it. So there's ways to find, errors that, we're human, absolutely, that if you didn't clear it, or if you had a check that you sent for, office supplies or something that never cleared, you can research that, and you can find old items that, should have cleared at that time.
Thank you.
I'm going to take the same risk.
Absolutely, absolutely. And I'll tell you, if I don't know the answer, I'll help you find it. That's all I can say.
So basic. This is so basic. So when I took over books at our farm, it had already been
several years since they'd been doing books, and they were entering expenses directly from a bank statement instead of having receipts and entering it from receipts, which seemed like bad etiquette to me, because you're not, if something screws up in the bank, you're not going to know about it.
Or if something didn't clear the bank. Yeah.
Exactly. So my question is, what should my desk look like? Like, what, like...
Should not look like mine.
No, I mean, a bin of checks coming in, bills, receipts, like, and like, what, as a bookkeeper, you sit down once a week, you enter receipts. Like, what is good etiquette as far as very basic?
I was just going to ask that. We've worked.
I do QuickBooks. I get the technical end of QuickBooks. It's more just like the very basic, like, okay, what is the proper way to go about this so that everything is in the system when
In the perfect world, you would enter your bills that you receive in the mail. You'd have, incoming, and then you'd process those incomings as entering your bills to be paid. So whether you pay your bills twice a month or once a week, at any given time, you can look at your accounting system and know who you owe what to. If you are getting your mail every day, it kind of depends on how big the system is too. If you only get 3 bills a week, you don't really need to do it every day. But when you process your incoming mail, you want to know what's out there that needs to get paid, so you'd enter those invoices. And same as your bank deposits. If you're a big company, you do it on a daily basis. If you're a small company, you might do it a couple times a week. It depends if you have cash or just checks or wherever. So if you have incoming, once you process that mail, you can set it in your bills to be paid folder. And then once a week, when you are processing payroll and paying bills, it's just easy. Vendor pay bills, click off the ones you want to print the checks to, send them to the printer, sign them, and then they're done. Then the bills are filed away. So it really depends on how large the system is, whether you're doing it on a daily basis or a weekly basis. But yeah, I mean, you wouldn't. The best bet would not be by doing it from the bank statement.
So if we followed that through, okay, so you got the bill, you enter the bill, then maybe a different day, you might pay it that day, you might pay a different day, you pay the bill. If we followed that bill through, then you would go to the register, maybe a different day. And
so it would already be.
That's all I do is I enter the bill and I pay it, but you're supposed to do something else.
It's it's already in your checkbook.
You're supposed to do something in the bank account, right?
If you're entering the bill, if you're entering the bill, okay, it's in your payables. When you're going pay bills, it's coming out of your payables and into your checkbook. So when you hit vendor pay bills, it's coming out of your liabilities and it's going right into your check register to reduce your checkbook balance. Okay? So at that point, you're just going to sign the checks and mail them. They're already in your bank register, so you don't want to enter them again. They're already in your check register. So then your next step would be to reconcile your bank statement.
That's the part. Okay, so you got to go in there and just check it off that you paid it?
When your bank statement comes once a month.
Ah, okay. Yeah. So when the bank has cleared the check, you check it off.
I'm not one that goes every week and goes in and checks the checks that the bank has. I wait for the bank statement to come and then go from that bank statement.
Take it month by month. So if you wrote a check out to utilities.
Right. You wouldn't do it right
and it didn't clear until April, but you wrote it in March. When you go to match the bank statement with QuickBooks,
it's not there.
It's not there.
Yeah.
So you don't check it off. So it might appear there, but it hasn't cleared, so it doesn't count for.
And that's the end of the life. That's the end of the life once you've checked it off and it's clear. You don't do anything else.
Well, you always keep your records, but we'll talk about that later. Yeah, sure.
So is it possible to use QuickBooks for keeping track of expenses and income without using the whole check writing I mean, we have a whole checkbook of full of checks that we.
Like a spreadsheet, basically.
Yeah, sort of more like a, but.
So you're still manually writing your checks, or no?
Yeah, partly because we're not quite there yet with giving the internet control of our checkbook. It's like that feels.
Well, it's not going to control your checkbook.
No, I know, but.
But at the same time, you can still manually write your checks and enter them onto QuickBooks, so that you have that running total of rent expense, of office supplies. You can look at that profit and loss anytime.
So I'm entering it on QuickBooks. I'm also handwriting manually the check, and then I'm just checking off that I.
Right. And the next step would be to convert to printing your checks. Right. But you would have a comfort level if you did that for a while to see, how the check register works in QuickBooks. You still have the paper. We always like paper. But then you're still tracking your balance to be able to do that.
So how does that work so we have, we credit card for services. So on our day sheets, we can print out that, we took in X number of dollars that automatically get deposited to our bank account by the credit card company minus the fee, which is going to be different than the total we have there. So how does that work? I still don't understand how that.
So it depends on how detailed you want it. You could do a sales receipt and back out your credit card fee, or we'll get to that where you can just look at your check entering a deposit just directly into the check register. And let's say you're depositing $1,050, but the sale was actually $1,075 with a $25 credit card fee. So you could do a sales of $1,075. It would leave you a negative $25, which would hit credit card fee. So it would balance to your $1,050 that you deposited, and you would be able to keep a running total of how much these credit cards are really costing you. Because people really don't use cash anymore. They really, cash and checks are going by the wayside. I mean, really, everything's going on the debit cards or credit.
Right. Well, and we have Square, so it's deposited daily. It's not deposited, by batch or whatever. It's just the minute it's done. So each time we get a little email saying this has been deposited and.
Oh, so it's like 6 transactions a day instead of just one?
Yeah, I believe. I don't think they. Yeah. All right.
Add them all up. Put them on deposit.
But when you reconcile your bank statement, that's where you have to, when you're looking at that bank statement, you have 6. That's why I'm wondering if you have 6 transactions for that day, it's going to make your reconciling a little longer, but as long as they tie.
So do we put that percentage that is being taken out as an expense, right? We would classify that as an expense.
So your sales are $1,075, your deposit's only $1,050. That $25 is an expense that reduces your profit. So yeah. So Nicole, okay, sorry.
Typically for my PayPal deposits, I've been doing a journal entry, so that way my fees,
are going under the miscellaneous, and so that's fine.
It's the same thing, absolutely. When you open that check register, at the bottom where you can hit split, so you can put more than one item there, it's doing a journal entry. So it's just how you look at it.
Okay.
This is in the spirit of the possibly stupid questions, but you've explained it to me really early on, and I still haven't got it.
Okay.
And I feel like it's a really basic principle. I may never understand it, but if you could repeat it, please. When I'm doing a journal entry, and I know not everybody does journal entries, the daily sales for the day, there are 2 columns. There's debit and credit, and the money that we receive goes in as a debit, which I think I sometimes understand it, and then it disappears.
So we're gonna start. Sorry about that. We're going to look at what an asset, liability, and equities are very, very briefly. But when you're looking at increasing an asset is anything you own. cash, accounts receivable, equipment. A liability is anything you owe, accounts payable, notes payable, credit card payable, payroll liabilities. And your equity is basically, the owner's investment that they've left inside the company, whether that be corporate owners or a sole proprietor. So what Kate's talking about is on a daily basis when you're trying to record your deposits through a sales general journal entry, why do you debit some things and credit some things? So we're kind of moving into like a QuickBooks or a Sage 50 where we aren't just putting in a total number, we're breaking down, let's say the Larry's Landscaping, we're depositing 1,075 or 1,050, and we have landscaping of 1,075, so we would deposit into the checkbook as a debit because it's an asset, we want to increase our asset, and we would credit sales as the liability so that your journal entry balances, and as a sales, that would a credit would increase your sales, a debit would increase your expenses. So when you're recording your transactions on a daily basis, if you're doing it through a general journal entry, that journal entry has to balance every day, and your debits and your credits will offset each other so that you know you've recorded every transaction that took place that day. So some of you are familiar with like a Z strip or a Z tape, X tape, Y tape, whatever they are at the end of the day. You hit the button and it breaks down whether you sold soda, groceries, taxable meals, whatever. And so that would be how you break down those day-to-day transactions of what the debits are in the checkbook and the credits are for the offset.
Thank you.
You had a question earlier, but I think that sort of answered what I was trying to figure out in retail then. It's a daily
Journal entry. So every day I'd say I sold $1,000 today, and I would need to manually go into my QuickBooks. And what happens if you get behind and you don't do it for 10 days? You can just do it.
There are programs that transfer into computerized accounting programs. I've had some people with a lot of success and some people with not a lot of success. So it really depends on that initial setup. If you want things to transfer at the end of day so that you're not doing a general journal entry every day, you need to make sure that, for one, you know what you're setting up when you start and that it works. It's easier to fix it on day 1 or 2 than day 364. So, but there are ways to integrate your point of sale, basically, into QuickBooks or Sage or whatever software you're using. Sure. Okay, I'm going to zoom right along because I think we were kind of afraid. We weren't quite sure how long we were going to be taking, so if I'm going too slow, go. Okay, so this is the reason why you reconcile. You reconcile your balance sheet items against your bank statements, accounts receivable and accounts payable. I'm going to flip the next screen, I think. You can see where this is a QuickBooks, right? This is QuickBooks. What they have for payables, we have a sample company that will show you. They'll tell you your current payables, what's 1 to 30 days, and your total. So this is in your ledger here, the 1879, which would balance to your balance sheet of 1879. So at any given time, you can print a report from Sage or QuickBooks of who you owe what amount of money to. And this is why you'd enter that on a daily basis if you wanted to really keep track of everything that happened on a daily basis. Again, manually, you can still create a balance sheet and a profit and loss if you're on a manual system. You just have to keep your records and in a way where you know what your checking account is, your receivables, your fixed assets, your vehicles, your accounts payable, your credit card payable. Just because you're not on a computerized system doesn't mean you can't create a balance sheet. And the next one is a profit and loss. What's your income and expenses for the year? Okay. Calculating payroll. If you're on Sage 50 or QuickBooks, they have a payroll component that basically you put in the number of hours and it goes, boop, this is what your check is. If you're on a manual system, you have to look at what your payroll is, what the wage brackets are. So if you hire an individual and they're claiming as single as one exemption, you're going to look at these charts. This is actually the federal chart. This is a Vermont chart to see what you should withhold for them on a weekly basis. Sorry, this is weekly. So briefly, you're going to pay Social Security tax at 6.2%, Medicare tax at 1.45%, federal withholdings, you looked at the chart, state withholdings, you looked at the chart. So someone who was making $600, their net check would be $473.10 by the time you were taking your taxes out. On the flip side, the employer matches your Social Security and Medicare. So it's not like, oh, my expense this week is $473. No, your expense was $600 because you withheld all the taxes from the employee. You're going to turn those over to the government. And you're going to pay Social Security and Medicare at the match at 7.65%. Federal unemployment is currently 0.6% of the first $7,000 in payroll. Unemployment, it depends on what your expense rating is. If you've had a business for 30 years and you've never laid anybody off and nobody's claimed unemployment, you're going to have the very low rate of 1%. It's actually 3 years. But if you're an industry that shuts down in the summer or shuts down in the wintertime and you have an expense ratio, the highest is 8.4% and you're taxed on the first $16,800. So an employer could be paying between $168 to $1,411 a year for employment. Yeah, go ahead.
So, let's see, if we have the company payroll matters who writes our paychecks, sends them to us, then we enter. That's different from having QuickBooks. Okay. And everything gets pushed in separately, right? Like the taxes from the...
Right. If you're not using QuickBooks Payroll and you're just keeping your check register and handwriting the $473.10, there is a reconciliation process at the end of the year that we have to gross up your payroll so that we're making sure that we're recognizing your gross payroll.
But doesn't payroll matter?
Yes.
If you're having a payroll company do it, is that what you're talking about?
They write the paychecks.
And a lot of our companies, businesses that do that will do like a journal entry for every pay period that reports the gross.
But every single, so the taxes just get entered into payroll tax? And then,
Okay, next. And this is just a manual payroll card to show how we calculated it. You can also go on to paycheckmanager.com. If you're still doing it manually, but you want them to calculate your taxes, that's just one website that Lisa found that would show you the taxes. And if you'll notice, they're coming up with $62.92 because they're using rates instead of charts. So, same thing. Okay, and I'm going to let Lisa talk about this one because she's the Excel guru.
So I don't know how familiar you guys are with Excel, but basically you can do exactly the same setup as you were for the manual. The big difference with Excel is you can put formulas in, obviously, that do all of your totaling for you. Just gives you a little more comfort that the numbers are right, that you haven't made an adding mistake. So you can take this, again, it's important to keep proofing, whether you do manual or Excel, you want to make sure that what you put in and take out balances at the end.
Can you just explain again, please, the definition of proofing? What makes it different from reconciliation and balancing?
It's the same. It's basically the same. Like reconciling your checking account. Like you had said earlier, you don't put it into QuickBooks. But the bad thing about not putting in your cash and your checking account into QuickBooks is you may not get all of your expenses. If you happen to miss putting something in and you're not reconciling it, you lost that expense for the year. Does that make sense? If you're just putting in your expenses from receipts and you happen to miss a receipt but you paid for it with your checkbook, if you were doing your checkbook, you would have caught that and it would have got into your QuickBooks. Where if you were putting it in your receipt, from your receipts, and you misplaced that receipt, you'd never catch it. So, that's kind of the, one important.
It's the catch-all.
It's the catch-all, making sure that you have captured all of your expenses and your income. Okay, so if you have set up a spreadsheet, you can do things like, oops. Yeah, that's why I brought my mouse. Setting up your Excel as a table, which is super easy. If you go to Excel, so this is that same spreadsheet, and you can insert a table, and it will select your area. And this one, mine, has headers, so if you just check that off. So there's a really easy way to convert your data into a sortable data. So say we want to see, so if this was like the whole year's worth, obviously you'd have way more data here. If you wanted to see all of the expenses that you paid to the plant nursery, you can uncheck them and just pick the plant nursery, and it would pull up that data for you. And you can also put in like totals and total the rows. If you come to each one, you would just tell it you want it to sum. So here, under materials, you want to sum, and you've paid $700 to the plant nursery for the year. So it's super easy to, unsort and unsort. So if we go, yeah, yep. Well, each step is going to be better. If you use a manual, you're not going to be able to sort and unsort, obviously, on paper. When we go to Excel, you get a little more benefit because you can start putting totals in, and you can sort and analyze your data a little differently. And then you go to QuickBooks, and you get a little more. Okay. So QuickBooks ultimately is the best way.
Okay, so you don't necessarily need to use Excel and QuickBooks. Okay.
My things, and I use the accounts basically match the Schedule C in a federal income tax form. So that's my accounting system.
Yep.
And I color code them.
Sure.
So then I have another table down at the bottom that sums it by the code, so that when I have to turn in my things, I know what section they go into at the end of the year. But I have to stop and add them up by, going by sorting by color. Is there a way to make that by color go into that table down below based on color code?
I don't think so. You might be able to do that more with the pivot table, which I'm going to show you that.
Okay.
But I'd have to look into it and see if I can figure out how to do it.
All right.
But you might be able to with the pivot table.
Yeah, if you get to there, Calvin, show me how to do it, because I must have forgotten.
I'd have to research it a little bit, but I wouldn't be surprised.
Okay, thank you.
So if we go back here. So this is back to the table, and this is just showing you, this little symbol here shows you that it's filtered based on this field. So to unfilter it, we just go back here, and you can change your filters at any time. We want to see everything. You just select all, and everything's back. So the other thing we can do is a pivot table. So you can take your data from that same spreadsheet and turn it into a pivot table, which just analyzes, like if you wanted, for some reason, if you had a whole year's worth and you wanted to know how many times did I write checks to the plant nursery for the full year, you know, how many trips did I make there? You might have 10 trips, or, or you can tell how much money it is easily by just summing those categories. Oops. So if we go back here, we can insert a pivot table, which selects the area you want to get your data from. And I usually do it in a new worksheet, which just puts it on a different page. So if we want to see who it was paid to, and we want the amount, and we can count like the check numbers, then you just move them here into the correct boxes. So there's 4 boxes down here to filter by, and you just move your things around to get them to look like what you want it to, basically. And here you pull it up and it defaults to count. We just want it to sum the amounts. So now we know that we paid $700 to the planned nursery and we wrote them 2 checks. So this is kind of advanced Excel usage, but it's just some, you know.
Hence why we're here and Lisa's doing that, because that's where her background is.
But I just wanted to show you, you know, if you really are using Excel, you really can do some cool things with it, you know, quickly and easily to get your data.
So these are macros that are already on Excel. Is this a special accounting version of Excel, or this is just Excel? Okay, so I have that already, if I have Excel.
Already. It's just insert, and then either the table or the pivot table. And then, you know, make a spreadsheet and play around with them. It's pretty easy to, the only thing I would say if you were doing a table, if you put this into a table, you have to, once it becomes a table, if you see the design, this pops up after you've turned it into a table. So to put it back to a normal data, you convert to range, which puts it back to normal.
That's a spreadsheet.
Yeah. So really that's the only kind of trick once you put it into a table, getting it back.
Is there somewhere that you can give yourself a tutorial?
If you get online and look on, what is it that you can do? It's, I don't use this a lot, obviously, but where everybody puts like little tutorials, they're all over the place. YouTube, yeah, sorry. There's a ton of them out there. So you just have to find one that talks about it a little bit, and it'll give you.
The pivot tables are really useful. I used them a lot when I'm doing more estimating, but they really do help. And then the other thing that's really handy is if you go through and you have a section, a lot of times in your sums, if you have several different pages, then if you use conditional use on them, when it changes it'll show up. And that's pretty handy too. This is where I'm putting my daddy in and it came over here and changed this block. Okay, is that what I wanted to be there? And does it look like what we're supposed to do? So it makes it really helpful using conditional to do that and input it when you so you can check it to see if it matches what you want. It's pretty handy.
All right. Any other questions for Lisa before we move on to the next section? So this kind of brings us to, do you need more from your accounting software? And kind of moving from manual to using Excel to, do you need more of the accounting software where you want to be able to send out customer invoices and statements. You want to be able to, at a press of a button, you can print the bank, a financial statement, a balance sheet, a profit and loss. I'll have, people will call us and say, the bank wants this. And it's like, okay, well, if your QuickBooks is up to date, all you got to do is go in, print this report, hand them to you. You don't need, because if we have to generate that for you, we have our own QC procedures, rules and regs we have to follow, so it's going to cost you a lot of money if we have to compile that and do that for you. So that's a cost-effective standpoint from you guys. Plus, it also helps you as we're talking throughout the year, or when you're looking at quarterly estimates, what have we done this quarter? You can look at that bottom line and say, okay, I've got a big profit. We need to figure out some tax planning, how to spend some money, or be prepared that on April 15th you might have to write a big check. So as we've said, I think most people are either on QuickBooks or Sage. There are other, as you get more into bigger businesses, there's more comprehensive general ledger programs, but pretty much the ones that we do are QuickBooks and Sage. So the advantage, I think you want to move to the next slide, is over the accounting software, over Excel, your software alerts you when changes to be saved, being QuickBooks, if I'm entering information for people to say, this is 90 days, past the date, is this really the right date? It kind of gives you those types of warnings. Do you really want to delete this before you delete it? Those kind of helpful things to kind of sometimes just double check yourself. Also remind you it's been so many days, you should be backing up your data, because we have had clients who have had computer crashes and they've lost things and have had to recreate lots of days. The online is automatically backed up on servers. I don't know that there actually is.
You do have to pay a subscription fee to have them back up, I believe, online. We suggest if you have like a server, we have ours stored on a server, we have an external backup on our server, and then we also use the little zip drives, the thumb drives that people can pick up very reasonably.
So you would recommend backing up?
More than one place, yes.
I'm not sure you can back up QuickBooks Online.
Not anymore? No, I mean, the online service. There was a QuickBooks Online service that they used to be able to send it to the online backup. The QuickBooks Online is automatically backed up on their online servers. They're hosting that data. So I don't think you can back up. They're backing you up.
Yeah. But for the desktop versions, there were options where you could save it on their server, on their cloud, versus being on.
Every time you exit the desktop version, it backs it up, doesn't it?
Yeah, it prompts you for it.
You have to say yes. And where you want it to go.
That works too, because my desktop crashed and I had QuickBooks on it, and because I had a backup, I was able to get it over to my notebook. And I'm going to just keep it on my notebook, because if I have questions, I can probably bring them to Julie.
And we're all guilty. I mean, I'm just as guilty as my clients are of, you get busy and you don't always have that thumb drive handy, so you're not. But it'll take once, and
you'll become a daily backer-upper.
You'll become a daily backer-upper. The other thing with the accounting software is you can have multiple users. You can also give, like I know in QuickBooks, I don't know, I'm sure Sage might be the same, but you can give people access to certain parts of the accounting program, not to the whole part. I've had clients that they use it for time tracking, so employees can have access to log in, fill out their timesheet, fill out what jobs they're working on, and that kind of all feeds into their financials and know where they are and what programs they're working on for their billing. That's kind of more in the nonprofit governmental world. But so just because they have access, they can't access like the checkbook or whatever. So that's kind of a benefit to that. And then, let's see, Audit Trail, to be able to, go back, check data, we can, see deleted, see what's changed from our standpoint as a tax preparer. I use the find button a lot to, when sometimes things aren't classified correctly, so we'll move things, but it helps you when you're trying to find something, you can put certain numbers in there to look for. So obviously cost is a consideration. Which, as we've seen over the years, QuickBooks kind of knows they have us and they have our clients. That's why I think they went to, every 3 years they make you upgrade, because people used to just be able to be on it and not have to pay to upgrade it all the time. So, yes.
Back to the Audit Trail thing. I don't know if this is the right time to ask this, and I think you said something about you're going to talk about what you need to save. So, like, if I pay for stuff on a credit card, I have the credit card statement, and then I also enter it into QuickBooks, and I do each thing as like itemized expense in the split thing, So I don't keep my credit card receipts. The receipt that I get in the thing.
You need it.
You need it for the IRS.
Really? For how many years?
7.
Oh, Lord above.
But you could scan it in.
Oh my goodness. That's where you have to have the shoebox then. Then you have to have the shoebox.
File folder.
For those little.
So you staple them to the credit card bill just as soon as you've entered them and paid the credit card bill, then you file the credit card bill. But if you are chosen for an audit and you have a payment to Costco, for instance, and you've classified that as, $10 personal, $90 office supplies. If you don't have that Costco receipt to say, this is my $10 lettuce and this is my $90 file folders, the IRS could disallow that expense. So you do need to keep the backup. It's very important. Yeah, Deborah?
I've got tons that are all electronic, like nothing, I don't even have a receipt. You know what I mean? It's like, it gets billed on the card or whatever.
So that's fine, as long as you can access that backup for the automatic billing. So if you have, like your Fairpoint or AT&T or whatever, and you don't get a paper copy, as long as you save a PDF so that if you are chosen for an audit, you can present that either in a PDF form or a paper form, that's fine. But you still need to have the backup to support the information that you've recorded.
So are you talking like auto pay, like through your bank?
Yeah, pretty much everything I do is electronic.
No, yeah, but so how do you have a PDF from an auto? Is that just your bank statement?
No,
if you log into your account.
If you log into your
statement there. So you're saying download the statement.
Yeah, save them either on that backup floppy, the hard drive, server, wherever you're saving it. You do need the backup data.
So you can't just have it be the fact that it's online within your bank online thing, and none of that ever goes away. It's all there. You'd still have to switch it to a different world of PDF.
Well, I know for credit card statements, when even some of them, after 3 months, you can't go back and look at your statement to kind of get the backup. So that's where some of it does we kind of think it's always there, and you might be able to pay a lot of money to get it if you needed it, but. Right. Right, so long. Yeah.
So everybody's going paperless to save paper, but then we have to print it anyway.
I know.
Right? Exactly.
Or scan it in. Scan it in.
Don't print it, just save it.
So I'm just curious, the etiquette again, the bookkeeping etiquette, if you had to enter that physically into your system, if you had an EFT, transaction, you would pay it online, and then best thing to do would print it out, put it in your to enter bills, or
or just enter it directly as a check or EFT, even as for check numbers, when you're in QuickBooks, and if it's an online, I usually code it as either online payment or a debit, or if it was an EFT, just so I know it's not. It was kind of it wasn't a physical check.
Or you could take a picture of it and file it in a file on your internet.
Yeah, the scanners, absolutely. You can upload as long as you have access to the backup. You don't need the paper, as long as you can access it, if chosen, and they want a printout of, let's say, repairs and maintenance. So, for instance, for QuickBooks, you just double-click on your repairs and maintenance. It'll give you 3 pages of what you've spent for that audit period, and as long as you can provide backup copies for what was expensed, you're fine, whether that's in paper or PDF.
So if you have an email, you pay your online and use a credit card, they send you an email. So it's out there somewhere. You can retrieve it if need be. I don't need to
But if your credit card statement just says Costco for $100, it's not going to know if that $100 is deductible or not for you. So again, keeping that manual receipt of the $100 somewhere, whether that be a PDF, folder or what, whether you do that by month or by code, I don't, however you find it easier.
You can have a folder in your hard drive in your computer and scan.
And I think there is apps and some different programs that you can scan and will help you organize too. I haven't used one, but I think they're out there. Yeah.
So I don't want to spend a lot of time on this, but if you do get audited and you haven't kept your receipts, for your Costco example, so there's $100 that you spend at Costco, and you said $90 of it was a business expense, and they say you can't prove it.
So then what will actually happen? You'll have to pay back the tax that you deducted on the $90 that you can't prove?
Anything you can't prove that they disallow.
You'll just have to pay back the tax that okay.
Which $90 is fine, but when you get to $32,000, that's when you're...
Right. I'm just trying to get my head around it because I haven't.
Yeah. They recalculate your tax return for you and they send you a bill.
7 years?
Yeah, 7.
7 years. 7. If you file, if you're filing. If you don't file, you need to save them forever because they can go back. There's no statute of limitations.
Right. The statute of limitations is 3 years. If they find something within the 3 years, they can go back an additional 3 years, which really means you have 7 years.
Right. Okay.
Which is funny because the ink on the receipt only lasts like 6 months.
Yeah, exactly. If you're lucky. Again.
How many in this room have ever been summoned by the IRS? Audited?
Not audited, but I had to, they caught me on something.
Just a numerical error. Yeah.
Most of the audits we see these days are probably what they consider a desk audit. You know, something kicks out. Let's say, you know, you're an employee and you have 50,000 business miles. You know, so they send you a notice saying, please come see me on Thursday the 28th to review your business miles. As long as you can provide them with your vehicle mileage log and where you went and why you went and you weren't reimbursed, you know, it's going to stick. So as long as you keep those records, yes.
Yeah, just to let you know, I was lucky. Every time you sell a business, a lot of times you're going to get kicked out for an audit. It's happened 4 out of 6 times to me. So if you're going to sell your business, be sure to have everything ready to go. All right.
So this, I think we've kind of talked about setting up your chart of accounts, which we'll kind of talk about a little more when we get into QuickBooks. But chart of accounts are kind of set up by assets, liabilities, your equity, revenue, cost of goods, expenses, other revenue expenses. So assets, Julie already talked about, things you own. Those are your cash, accounts receivable, you know, your equipment, vehicles, liabilities, your payables, payroll liabilities, credit cards, loans that you have. Revenue, obviously, the streams of revenue you have for your businesses, cost of goods sold, things, you know, your purchases, especially like if you're in retail or manufacturing, your freight, your labor. Expenses are all your consumable, your rent, office supplies, taxes, payroll. Then other revenue expenses are kind of those out of the ordinary things that aren't, you know, you sell an asset, your interest income, those types of things that are kind of not your typical non-operating. And then you usually set up your chart of accounts in order of liquidity, which means the expectation that can be converted to cash, usually within 1 year. So you can see, obviously, cash, your receivables, your inventory, your fixed assets. And the same with your liabilities, current and your long-term liabilities. You can choose to, I have clients that in QuickBooks you can either choose to use an accounting numbering system for your accounts, or you can just use by name. And when you use the accounting numbers, the ranges, I think it's on the next screen, Lisa, assets are the 1,000s, liabilities are the 2,000s, equity is 3,000, revenue is 4, cost of goods are 5, expenses are 6, 8 and 9, other revenue, other expenses. So it just kind of keeps those in those categories.
Most of our clients don't use account numbers for QuickBooks. So a few of them do, but the majority of them just use the name of the expense. It's just as easy for them to remember that rent is rent versus 6540. But Lisa, do you want to just pop up QuickBooks just to show them how to, I'm not sure, did we do a slide on that, or did we show them how that you could add account numbers? We did a slide. Okay, so we'll come to that then. Sorry.
So this is, you know, if you're just using your names of your accounts, but then you could, and then if you decide you wanted to do numbers, and in QuickBooks it'll show you when you do it, if you've got numbers, how to do that.
As just the thing in QuickBooks where you name the different expense.
So your chart of accounts is a list of all of your accounts: balance sheet, income statement, all of your assets, liabilities. It's your whole entire list that you would have. And then you can add and delete those as you...
Can you pop open QuickBooks, Lisa, for
Does
just a
that
minute?
mean it includes like telephone bill? Okay.
And anything like when, and we'll get to this, I think we're going to take a break in a minute, but when we come back, we'll start to get into kind of the nuts and bolts of QuickBooks. So this is a chart of accounts, and when you set up a company in QuickBooks, depending on what type of industry or company you choose, there's kind of already a select set, but then you can add or delete anything that really fits and tailors your particular business. Telephone's a pretty standard one, but I've got some people for a certain industry might have very specific accounts, and you can add those just by going to the bottom. You had account, new, you select which type of account it's going to be. So yeah, if you just want to hit. And then you can hit continue, and we're probably going to name it here somewhere. And then and then this is where, and if you want it to be a sub-account, like if you've got telephone and you want to know what's cell phone and what's office phone, what's the yellow pages, whatever, however you want to set that, if you want that detail. Yeah.
Can you take off accounts?
You can delete accounts if you haven't used them. If you have used them and there has ever been data in there, you can make them inactive so they don't currently show up. And if you wanted to put something there, it wouldn't let you unless you went in and made that.
So it won't even show up.
Because I've got people who have used accounts and then over time things change. They're like, we don't use it anymore, so they just go in and make it active. But if you've never had a transaction in their account, you can actually go in.
Oh,
So some expenses are 100% deductible, and some are like meals are 50%.
50%.
So does it matter? I mean, if you don't, is it just meals that is that way, or does it matter what category?
No, so I have clients that kind of have like a travel and entertainment category, so I have to go through kind of and look at that and pull out the meals because for tax purposes, your meals are only 50% deductible. So I
Is
try
there
to
anything else that's not 100%?
only
Not if it's for business.
Right, not if it's all business. Only if it's something that you say, like you put all your cell phone business on there, you're sole proprietor, but you say, I also use my cell phone personally, so I'll ask my clients, how much of your cell phone is personal versus business for tax return purposes? You can put it all in there, or you can, if you know kind of like 80% of it is business, you can put 80% to the telephone, 20% as an owner draw.
like a company car.
Right, the company.
Yeah. Most of our people just put everything under the expense, and then at the end of the year, when they're going through that profit and loss, they'll say, well, we do use it personally, and this is the percentage of personal. It used to be that your cell phone bills came and each telephone call was itemized. I haven't seen anything like that these days. Usually you just buy free, so many minutes and so much data. So it's really, basically on the honor system of what you're really using it. And I have yet to see an IRS agent that's not reasonable about an allocation as long as an allocation has been made. If you're saying 100% of everything is business, they probably would have an easier reason or easier time challenging that, because they could probably go through your call history and, did you get a text to stop and get milk for that night, so. Oh, we gotta take a break. We're getting the signal.
What constitutes a business meal?
Having meeting with clients and discussing business. If you have employees and you're doing staff meeting, employee parties are actually 100% deductible if you're having like your employee staff Christmas party. If you're traveling, away overnight, out of town, on business, obviously you have to eat. That's deductible.
But not going across the street for a sandwich at a lunch break. We're discussing your business with your partner.
Yep. But if you discuss your business with your partner every day, at lunchtime, you could be challenged.
Right. And I've actually read, I think in updates that we get, is you should write on that receipt, which is a pain, who you had lunch with, what you discussed.
Yeah. So if your business is just you and your husband and you have a party, right? 100% deductible.
I would say you could get away with that a couple times a year, absolutely.
Right.
If you did it every lunch.
Right, if it was like a $10,000 expense, they might question that.
You know, in Tahiti, maybe not.
Yeah. Right, reasonable is the word. All right, I think John wants us to take a break.
10 minutes and we'll be back.
All right, everyone, let's get back to it. Some of you who saw the press release that I sent out, or the ad that was in Front Porch Forum or whatever, remember that it started out with a quote from me, and that quote that was from me said, nobody ever decided to go into business with themselves because they could hardly wait to keep the books. Very true. It's something that a lot of small business owners really have an aversion to. And I think a part of it has to do with having math anxiety. But keeping your books and keeping them accurate and keeping them up to date, as these ladies will tell you, is pretty crucial to running a sustainable business. And that's the key here, is the sustainability of what you're doing. So, on to phase 2.
And I think the other part of that is I think people are afraid I'm going to screw it up. The beauty of QuickBooks is there really is probably, I don't know if there is anything we can't fix.
We're not chopping any arms, any legs.
You know, like you can, if it's in the wrong account, we can fix it. If you miss something, we can fix that. I mean, you know, so you can't be afraid, which I know a lot of people are like, oh, I don't want to do this because I don't want to screw it up. But you learn by just trial and error. You can delete things if it's wrong. You can reclassify it if it's the wrong place. Void them. That program is really very user-friendly at that. So,
okay. So our next chart is looking at what the home page of QuickBooks looks like. And I think there's a couple of you that use Peachtree. It's amazing how close Sage 50, which was Peachtree, looks just like QuickBooks. So having not used Peachtree in at least 10 years, I was amazed when I opened it up and said, that looks just like QuickBooks. so I think they're trying to use all these accounting programs, trying to make them more user-friendly so that you can know, how you're going to enter a bill, create an invoice, pay employees, create receive a payment from a customer. So it's pretty easy to follow, what steps you want to take and if you're going to create a sales receipt and go from there. The next chart, we started talking a little bit about chart of accounts. And again, these are classified by account type. So if you need to add an account, it will give you the option to set it up either as a bank account, an expense account, an other current liability, revenue, etc. It'll give you the option to classify what the account type is. By classifying the account type, tells it where to show up on the report. So if you put rent expense in as a bank account, it's going to show up on your balance sheet, and that's really not going to be correct. But you can always change it and say, oh, I screwed up. I put that in as a bank account. It should have been into an expense. You open up the account, you edit it, you change it to an expense, and it's done. The next item we started talking about a little bit, if you wanted to use account numbers in QuickBooks, it's basically set up to, if you start a company, not to use the account numbers. But if you look under your edit preferences, and you'll see Lisa has added on the side how you would get there from the home screen. So if you look at the top where it says File, Edit, View, List, Favorites, if you clicked on Edit and went down to Preferences, it would open this up. These are all the items that you can change the preference in, and the account numbers at the top, you just check that box, and it would give you the option to add account numbers. So you could put your 1,000 as your bank account, so that instead of writing a a journal entry and typing checking, you would type in 1,000 and it would pop up as your checking account. In QuickBooks, this is Larry's Landscaping and Garden Supply. This is our sample company, and you can log right into it, right? And there's sample companies that you can look into, and this happens to be Larry's Landscaping, and poke around a little bit. But this is what the check register looks like in QuickBooks. Again, you have your date, your check number. These look like they're all to be printed. These happen to be payroll checks at the bottom. The bill payments, where it's coming out of accounts payable, that was what we were talking about earlier, where you're entering those bills as they come in, and at the end of the week you sit down and you pay bills. Well, those are the bills that are paid that are now waiting to be printed. Okay? Once they're printed, the to print will be gone, and the check numbers will show up there in that check register. This is another screen. You can enter checks either by going to the banking use register, or you can pull up banking write checks. And you'll see again at the top where it says File Edit View, fourth from the right is banking, and that's where you would go banking and to write checks.
That prints out a physical check, or is that an electronic check?
Either one. Your electronic check is something you're going to log into either that company and have them zap your account out, or you're going to log into your bank, let's say Union Bank, if you have your business account, or the TD Bank, and you have an automatic bill pay there, and you're sending that money out of your bank account directly. You would still need to enter it into QuickBooks if you're not downloading those transactions on a regular basis. And if you're doing an online transaction, that's where Deb was talking about putting the EFT for electronic funds or DM for debit memo, just so that you know that's how that was paid.
Can you download quick card purchases and charges
on a monthly basis and not have the online service, but just do it once a month? Can you download that information onto your QuickBooks and have it?
I know you can do it with a bank account. I haven't seen anybody do it on the desktop.
I don't think I have anyone doing it on the desktop version, but I think it can be done, because in your account information, when you're setting up the account, could you pop open the QuickBooks?
I understand the online version does it automatically, and that's probably the best way to go.
You have to set it up. Yeah.
So can you get up to credit cards?
If you're going to use online,
see here where it's,
Oh, yeah, that does. Isn't that what that little ziggy
see
thing
the
is?
Z? That shows that the transactions have been downloaded. So can you edit one of those accounts, Lisa? So you see where it's showing the account number. In there's a way to set that up so that it would link. And again, that's where I would just make sure the first one you do links correctly. I'm not a huge proponent on linking, because I've seen how years of stuff can get downloaded and it's doubled up or tripled up. But I know that's the way that people are moving.
Right. And it gets downloaded, but you still have to tell it what you went to Costco for, or what you bought at Hannaford's, or what you bought at War. You still have to, it gets it in there, but you still got to make sure it goes to the correct account.
right
And it will
category.
autofill, like if you use Ward's, it'll automatically, if you set it up maybe to go to office supplies, it might automatically go there. But you still got to make sure, even once you accept them in, that they're going to the right places. Otherwise, it ends up in uncategorized.
Can you still do the monthly reconciliation, or is the information not going to be in QuickBooks Online?
Your QuickBooks Online is automatically going to find matches for you. And what was the term? Discard?
Exclude.
Exclude. So if you have a journal entry for, say, it gives you $50 and $100, so the total is $150, but your QuickBooks Bank shows $150, you either have to match those two to agree with the $150, or you can exclude the $150 and then go through and manually check off your 50 and your 100. So again, you certainly can. It's just a matter of making sure that more than one item isn't downloaded in there so that you're entering it manually and the bank is downloading it so that we have $300 in sales versus $150 because it'll artificially inflate your checkbook balance. And if you don't have a real handle on what your real balance is and you're importing transactions that are doubling up, it won't be.
If you're downloading your credit card statements like that, do you then also need a paper copy of the statement?
Right. You would keep a PDF of that. Just because this downloads, this is getting the information from, let's say, Citibank into your QuickBooks, but it doesn't have the Citibank statement, nor does it have the receipts that should be attached to the Citibank statement. And again, this is to enter your credit card statement. Sorry. You would go under banking and then enter credit card charges so that you could keep track of your monthly credit card charges that are being used. Some people just use, if they write the check to Citibank and it's $1,000, and then they expense it based on office or repairs, you don't know if you spent it, $100 at Staples or $100 at Costco, or so I like to see the transactions separately. Vendor information. When you're looking at QuickBooks, I'm going to get caught up to you, I'm sorry. So your vendors, you add vendors. Can we pop out to QuickBooks for just a second? These are people that you're buying products, materials from. And your vendor center is where you can track. You'll see there's the $137.50, the $45, the $127.20. Those are all balances that are still owed to these vendors. So it kind of keeps track of it there. But if you wanted to add a new vendor, let's say we started shopping at ABC Company or whatever. We want to add a new. There we go. Let's see, where is it? So we're going to just type in ABC Company. So then you would fill out your name and your address, etc., blah, blah, blah. Then over on the left-hand side, an interesting thing that is very helpful for us and for companies at the end of the year is to look at the tax settings and whether this vendor is eligible for a 1099. So at the end of the year, when you're trying to add up your shoebox and figure out who you need to give a 1099 to, if you're setting up your vendor correctly, when you put that information in, you're putting it in once, you can run a report at the end of the year to say, oh, ABC Company, they're a sole proprietor, they're not incorporated, we paid them $2,000 this year, they need to get a 1099. You would check them that the vendor was eligible for a 1099, and you would enter their ID number, whether that be their social security number or their employer identification number. Yeah.
What makes them a 1099 vendor?
A subcontractor. Anyone who's providing services for you. Services, right. If you're buying a product from me, you're buying groceries from me, you don't need to give me a 1099.
Not goods, just services.
Right,
okay.
But if I'm repairing your roof, it's a service.
But the only people that get them are sole proprietors, not LLCs?
LLCs would get them. Incorporated companies do not. So if they're a corporation, they don't get 1099s. LLCs do.
So that's where if you have them fill out the W-9 form, and that will tell you if their LLC is a corporation or if they're not. And then you know who is an Inc. and who isn't an Inc.
Now, does a vendor, like for us, we have our office software that we have to pay a monthly fee, and there are certain,
I would say
is
software.
That a vendor?
I would say software, you're getting a product. I would say if it's your tech guy, you're getting a service.
But it's a whatever flat rate monthly fee every month to have their office software, which
subscription.
includes
it's more of a
subscription.
Yeah.
Right.
So I would say subscriptions you wouldn't.
What would that be? If it's not a vendor, what would
Oh,
that
they'd be a
It's still a
vendor.
vendor. It
Oh,
just
they
wouldn't get a
wouldn't be
1099.
subject.
Oh, yeah,
I'm
okay,
sorry.
but it would
I'm
be
sorry.
a vendor.
Yes.
Okay.
Yes, I'm sorry.
Vendors are pretty much anybody you really pay like expenses to. Or they can also be the bank too. But I mean, your customers are all people you're generating your revenue from. And then your vendors are really kind of your disbursements, your outflows.
So that would be rent.
Rent. Yep. Your landlord, your telephone company, your internet.
And maybe I'm going off topic, but if you're receiving, we've got an ATM in our shop. We just received fees to us, so I put it in them as a customer, but we're not selling them bagels.
Right, but you're still generating revenue from that. So I would say you're fine.
Yeah.
I've got a vendor that sells products and does services, so should I keep them separate?
No, actually, if they're a sole proprietor and you're receiving services and products from that person, for instance, a mechanic that's repairing your car, changing your oil, and it's a business product, you would give them a 1099 for the total amount. So they would deduct
the product included. Okay.
What happens if you were supposed to be giving people 1099s and you haven't? Because I have no idea.
You should.
But what if I didn't ever for like all these years?
So there's a new button on Schedule C that says, were you required to issue 1099s? If so, did you? Did you check no?
I think so. Because I didn't know I was. So then what happens?
Well, if you get tagged for an audit, they will come in and say, why didn't you send them? And they'll charge you $50 for every, up to a certain number of 1099s. So if you had 10, you would be owing them $500 in penalties.
Okay, so I got to figure it. I got to either now or after. I still don't totally get who I have to give them to.
My cards are up back, right? Did you keep the cards up here? Okay. So you can certainly grab my emails on my card as well too, and we can chat about that. Okay, so moving on. So vendors, we're going to enter bill, we're going to pay bill, we're going to track our payables. I jumped a little fast. There we go. Oops, sorry. Go back one more. So when we enter our vendor, we enter a bill. This is the next screen where I said we're going to check off the ones that we want to print that week. We owe something hardware $610 or whatever, and we're going to pay that one. So we're going to check that. And when we create that bill at the bottom where it says pay the selected bills, that's going to take it out of our payables, so it won't show that we still owe them anymore, and it'll put them in as a check to be printed.
Doesn't it take less time to just have your pile of bills and then just wipe the check?
It depends on what kind of information you want. That's why I said on a small business, you probably wouldn't enter your checks, your bills every day. But in a large business and you're only paying your bills like monthly, you might want to know if you have outstanding $2,200 or $4,200 or $22,000. At any time, you can look to say, oh, I've got money in the checkbook, but what do I owe everybody? So it's just a good way to, basically manage your company, know what to expect. Okay, you want to jump to customers?
Sure. Are we there? So kind of customers is same thing. You set up your information. So when you're doing if you're going to be invoicing off QuickBooks, when you create, do you want to jump to QuickBooks? So same thing here, where you can do your customer name, set up their address, so everything's in there. Who it's going to, all your information, so when you need to contact them, you can set up payment settings, sales tax information, and then when you go, can you back to and click on maybe an invoice, Lisa? So then when you are creating your invoice for that particular customer, all the kind of the information comes in. Then you can select if, depending on the type, like this is a gardening, landscaping. So you've got, before you get to this point, they've set up list of items that they, can you go to list and go under item list, where they've set up all their different types of revenue streams and products. And this is kind of more of the inventory products, what's a service, what's a non-inventory. But they create this list that some of them, they have prefixed prices for, and then on your invoice you can just select that item, tell them how many they're buying, it feeds right across. And then you have things that are subject to sales tax, things that aren't subject to sales tax, and all that kind of feeds through on that invoice. So then once you've set up you've got your list for all your revenue streams, products, things that you're selling. You've created the invoice. So if you want to go back, and the same thing kind of with the payables, you can look at a report at any point in time and say, this is what we've got for, this is who owes us money. These are people who are 0 to 30 days. These are our 30 to 90. These are our, more than 90. And for the people who maybe aren't paying, the minute you give them an invoice, you can also send statements out of QuickBooks. On a monthly basis, you can charge finance charges. There's options in there to charge finance charges on overdue balances if you've got people who are chronically late. But this kind of also lets you know, kind of who you need to nag, who you might not need to nag.
So, when I was doing wholesale billing, I was having difficulty discerning the difference in QuickBooks Online between a statement and an invoice. A statement
kind of summarizes, you got invoice number 123, X amount, invoice 456, X amount. You had a payment on June 1st, kind of it gives you that running total of what's happened in that period of.
And an invoice is?
Invoice gives you the detail of you bought, in the landscaping, you had 3 mowings, you bought 5 trees, you bought 6 bags of mulch, like it's going to give you the detail. So the invoice is either from like the landscaping or even from an accounting standpoint that really details the service you provided to that customer and the cost. And then the statement is like on a monthly basis, if you're rebilling them, kind of the summary of this is the invoice, it's kind of unpaid. Kind of like, you go to Country Home Center if you have an account there and they give you your invoice, but if on once a month they send a statement that shows, here's.
So if I have a customer who hasn't paid their bill, because I put 30 days on it, and I want to remind them, is it the statement that I send them?
Send a statement.
Perfect.
Yeah, and then you can choose or not to choose to assess a finance charge, or certain people you can assess finance charges. You don't have to do it to everybody, whatever your terms are. But so that way you're not having to like reprint out the invoice.
I was wondering what to do, whether I have to make another invoice.
Yeah, nope, the statement, right? Because if you do another invoice, then it's going to make it, it's going
A
to double your
mess.
revenue.
Yeah,
right,
I don't want to do that.
False revenue. But then that kind of, you can look, too, when you're sitting down, what do I have for money coming in? What do we got for money going out? So you can kind of juggle how much do we really pay today on our bills versus maybe what we've got coming in or what we've generated. So that kind of helps you in those forecasting.
The good payers and the bad payers.
The good payers and the bad payers, the people you got to get deposits from. So the next thing if you're doing invoices, what you want to do is once you've done your invoice and then when they pay you, which we were just talking to Elise about this, you may be a business that you're getting 10, 20, 30 checks a day. So you want to receive those based on...
you want to pop open QuickBooks?
Yeah,
Just say, we're missing a slide, that's all.
So then we click whoever this is. And then you would say, that they, or even if they paid part of the payment, say they paid $500, you can put $500 in the amount. Can you put that in, Lisa? If they made a partial payment, and then whether it was by cash or check or credit card, and then this is going to say, so you've got, you got 500, but they still owe you the remaining amount. Will still show in your accounts receivable, so you can track where they are, continue to send them invoices. And on this, you can either decide to have it go directly to your checking account, or to undeposited funds. And we were just having this conversation. If you're going to deposit, 10 checks in a day and have one bank deposit, we'd recommend it goes to what they call undeposited funds account. Then when you do that, then you go make a deposit. It's going to show all those 10 checks, but it's going to show up once in your check register, so it's easy to match on your bank statement when it shows that one deposit versus trying to say, okay, which 10 checks match my bank deposit, so that you know on this day you had collected, or even if you do it, you make
So Lisa,
one
go ahead
deposit.
and hit save and close here.
Yeah.
And let's just try to go under banking. This is a sample company, so we're not really. Make deposit. So you'll see
that
we have those
$500.
payments.
And you could click all of them if they were all going into that deposit. But if you were kind of receiving checks throughout the week and you do one deposit a week, then you can track every person it came from and what you have collected, but then it's all going to hit your bank statement in one versus doing 20 checks that you got to try to add up when you're reconciling your bank statement.
The different amounts.
Right.
It won't
When
just
you
open, yeah.
On your check register, you'll see the 1,050. But if you double click on the 1,050, it'll give you the 12 checks that make up the 1,050.
Yeah. So you can backtrack, you can go back and look. And if somebody says, oh, I paid you, you can go back under the customer, look to see when you got the payment. And then if you had somebody that you didn't do an invoice for, and they paid you whatever, $500, you can go directly into make a deposit, book that to a revenue account, and it'll hit your checking account. So we've written checks, we've done payables, we've done our customers. So then you get, this is kind of what we were talking earlier of reconciling. Very similar to manual, other than it's on the screen. So kind of prior to this, it has you put in, your beginning bank balance, which always carries forward, what your ending bank balance is for this period per your bank statement, and then you go through and just click things that match your bank statement. And at the bottom, this should say 0. If it doesn't, then that's where you've got things that you can't account for, or you haven't, or on your bank statement that you haven't entered in QuickBooks, or somewhere
If you've transposed a number, if you're manually writing the checks and then entering it into QuickBooks, or if the bank made a mistake and did a $500 check instead of $50, that's the time to research what is different.
And then it also helps you keep track of, like we talked about before, what you've got for outstanding checks. Is there somebody you sent a check to 2 months ago, never got it? Did it get lost in the mail? Did it, before you just say, oh, they, and void it and delete it, then maybe make a phone call to say, okay, we sent you a check. Did you not get it? Did you just not cash it? Did it get stuck in your seat in your truck? Which we've had people do that. Any of those things.
So you reconcile when you have a statement, or can you reconcile?
Well, you're reconciling theoretically to your bank statement. I have people who do go on, look at their account online and see what is cleared and kind of go in on a day basis and click these. They don't finalize it, but they click kind of as they go or on a weekly basis. So to really finish it, you got to really compare to that bank statement. But I do have people that kind of go in on a daily basis just so for their cash flow, they want to know, and they'll click what has kind of showed up on their net teller or their online.
The problem with that is you're really not comparing it to what the final product is. So if you're clicking it off on a daily basis and you're never hitting reconcile, it's going to leave months and months and months and months of activity in that account until you reconcile it. So yes, it's great to know, what's clearing and what's not, but unless you've got your bank statement that you're actually comparing your books to the bank with, and to see what those unrecorded or uncleared transactions are, you're not really reconciling. You're just checking off the checks and deposits. So,
yep, right there. Reconcile now. And you don't want to, and it gives you the report. But you don't want to do it until that's 0. If you're 10 cents off, I wouldn't look for 10 cents.
You're saying you don't click reconcile until it's 0?
It needs to be 0. That's when you know the difference. At the bottom. Otherwise, that kind
And
of
so
puts
by
that-
clicking reconcile, then you're just saying, don't show me this anymore, I'm done with it.
Right,
That's,
those
it's not doing the
transactions-
work for you, it's just putting it away.
No, it won't let you reconcile. It won't let you reconcile if it doesn't balance.
Okay.
Yeah, you can find it, or if it's a quarter, I might just say enter adjustment and be done.
Or if you hit reconcile now, it'll put that under bank bank reconciliation adjustments. It'll show up as an expense.
We did that because like when we went online, it pulled all this old stuff in.
Uh-huh.
And so we did this adjustment and we reconciled it once, but all that stuff didn't disappear. It's still.
It doesn't disappear, but it doesn't show up in your bank reconciliation report the next month.
If it was clicked off,
okay.
Right. 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 Like if you never did this, like all these, you'll have years and years and years. And so then when you do want to reconcile your bank statement, you got to kind of do it all.
Would you recommend doing it monthly?
Yes. When you get your bank statement every month.
And so if like I'm going to be doing this for the first time when I eventually get this particular program, the right one. So is it, and if I connect it with our business checking account, is it going to pull up all that old stuff and?
You can. You usually set parameters on what dates you're downloading, if you're going to download. And that's the important part, is making sure if you're going to download, that you download only certain dates and you know what's been downloaded and what's not. If you make the mistake to download it twice, it will be in there and you'll have to delete it.
So hypothetically, I go in tomorrow and I do this. Which dates would I want to select to download?
I would assume you would start January 1st.
Okay, right.
Would be your calendar year. I would assume that most small businesses run on a calendar year.
Given that you lean towards the conservative version when it comes to downloading or updating, would you recommend not linking bank account and QuickBooks?
I don't link mine.
And
a lot of people do.
Once you have, you can't.
I'm not sure that you can for online. And part of the online QuickBooks, with the payroll, if they're doing payroll for you, they have to link because they have to come out of that account.
So this is probably a different time for this conversation, but I'm terrified of hitting update because I don't want to duplicate and triplicate.
Well, let's try it again together.
Okay.
You come in, we'll take a look at it together.
You'll wave your magic wand.
I'll sprinkle something over it and see what we can do. We'll try.
If I crash or something, like I had to reset my QuickBooks Online, that's when I would tell it when to pull in the dates. But after you've done it once, it only pulls in the stuff that's new.
The problem is like my client that is hooked up, I have a client that's hooked up with the online version, is we do like journal entries for their daily cash up sales. So that comes in, but then the deposits are also coming in. So it's not that the bank department's linking is bringing it in twice, but the information is in there twice. So if we, during the journal entry and accepting those deposits, your revenue is going to be twice. So that's
Lisa, they may have updated QuickBooks since the last time that we've had, if it's really not able to download twice, but I've had people on a desktop version download that information twice, and it does show up.
Online, you don't even tell it what dates you want.
Right, it does.
Online,
You're right. It says it's been so many days.
I mean, either use the stuff that downloads, and that's how you get your data in the system, or do it manually. If you're doing both, that's how you're going to duplicate it.
What I don't understand still, and I'll stop talking after this, is doing this, which seems to be really important. How can you do this accurately without continuing to download?
This is done accurately once you have all of your information in there, whether it's from downloading or manually writing the check and printing out the check, or downloading your deposits.
So something on the online version too is there's a place to exclude. So those entries that are coming through, when they're coming through on the bank statement, that are already entered as a journal entry, as a daily sales entry, you're going to check those off, and instead of match, you're going to exclude, because we're going to reconcile through this reconciliation. I think that's where we just need to get you comfortable. That's all. And downloading absolutely saves time. It's just a matter of if it creates more work after it's downloaded. That's all. You know, it's paying attention to what it's doing.
Directions. So then you can reconcile. It'll print a beautiful report so that you can go back and you attach that, staple it to your bank statement, put that away, scan it, save it as a PDF, whatever. So that then if you have issues or trying to figure out something down the road, you've got the backup to go there. So I think we talked a little bit when Julie was there with vendors, where you can get your vendor reports and your payables. Also, it goes into the 1099 summary. So this is where, when you set up your vendors and you click that they were a 1099, you can go through and get a report that says, these are the people I got to give 1099s to. Then you can map it. You can print out your 1099s right through QuickBooks. You don't need another separate program, and you don't have to write 20 of them by hand on the IRS duplicate sheets. So that's helpful.
Okay, so now that we have all of the information in there, what are we going to do with it? We've created invoices, we've entered bills, we've paid bills, we've reconciled the bank statement. What does that really tell us? Where do we go from here?
Then you get to look at your report. So it tells you on a monthly basis, quarterly basis, this is where we're at. Your balance sheet will tell you where you're at any point in time. Any day you want to look at it, if you've got your information up to date, that's exactly what we have in our checking account. This is exactly what we're owed for our customers. This is what we have that we're paid out if you're using the payable feature, your owner's equity, your fixed assets, so that you can use that to kind of say, this is where I am. When you have to fill out a loan application, they want to know, what do you have? What are your assets? What's in your checking account? This will help you do that.
It's basically, you go under reports, company and financial, balance sheet standard. If your checkbook's reconciled, you know everything that's gone in and everything that's gone out is accounted for. If you know that you've put rent under rent, you know that it's correct. You can look at this and know that my checking account has this, my receivables are that. It's really important information that would be very difficult to create if you were still in a manual system, or even Excel, where it's going to run your totals for you, but you have to create what's the difference, what's the balance in your checking account, what's the balance in your receivables. You're keeping a separate subsidiary ledger, whereas QuickBooks kind of integrates that, and so doesn't Sage 50. It integrates that for you so that you know what your balance is and how it ties to your subsidiary ledgers, either your payables or your receivables.
So basically, it analyzes the information in a more flexible way than...
It's not analyzing your information, but it's tracking your information as you enter it, so that at any given time, any Tuesday morning at 9 o'clock, if you wanted to see what your balance sheet looked like, you could open it up instead of having to go back through your manual system and find out what your checking account balance was, your receivable balance, what you owe for payable.
So all the legwork creates this beautiful statement. Like all the stuff you're doing every day, then you can put a report and say, okay, this is what, all the stuff that I've done entering, this is what it means. And this is how I can use that to make business decisions.
But it's only as good as the information that you enter into it. So if we wanted to do a price check on suppliers of Cabot cheddar, you'd have to enter in all the different prices of Cabot cheddar.
Right. So then you're jumping from a basic service industry balance sheet and profit and loss into more customized point of sale system that you would match item numbers. And QuickBooks has an enterprise version, and so doesn't Sage, so that if you used, Cabot cheddar and you were paying $1.50 for it, it would keep that inventory. If you bought 6 bars at $1.50, it would track the amount of inventory that you have. And then once you start using it, of course, it decreases your inventory when you're taking it out of inventory. But then the next batch you buy in 6 bars at $2 a bar. So then you had 6 at $1.50 and 6 at $2. It's going to give you an average cost of $1.75. So then you're getting more specific, which you can handle. It's just a matter of entering it differently. So when you would set up separate items underneath your bills to pay, your vendors, instead of setting up rent expense, you would set up each type of cheese you buy.
So then you can also gives you the profit and loss, which shows you your income and expenses. Oh, sorry. Yep. So yeah, so then you can also, the nice thing about this is from when you start QuickBooks going forward, then you can use comparative statements. So once you have more than 1 year in there, you got 2 years in there, you can say, okay, where were we January through June of last year compared to where we are January to June of this year? And it will tell you, yes.
So the profit and loss sheet is something I actually use. And one thing that I never see on there, and I don't know if it's because one thing I never see is the owner's draw.
Which is a balance sheet account, so you will not see that. Well, some people put it on there, but it should be in the equity section of your balance sheet.
So if you take distributions as an owner, it's not a deduction for the company. It's not. So instead of showing up on the P&L, which at any given time should show you your income and your expenses and leaves your net income, because the owner draw is never a deduction for you, you wouldn't see that on the P&L.
Well, I know. So as I understand it, like I have, so the P and, what is it? F. P and F shows me my income, and then out of my income would be the owner's draw. Like owner's draw would be considered part of that income, whatever I took out. And so if I want to keep track of how much I have done, I look, and so when I have taken out money, distribution, and I've categorized it as owner's draw, if I want to find an update of that, will you tell me one more time what I do?
Yep, you can go, if it's classified on the balance sheet.
Well, I don't know.
Or wherever that account shows up. If you double click on that account.
So like if it's
owner withdraw, it's on your balance sheet.
So I go to balance sheet and I should be able to see owner's draw. Oh. I guess I just never look at that.
Keep going. There we go. Owner's draw.
Owner's draw. So if you double clicked on that $5,000, then you can put in what period of time you wanted to look at. Like that's going to look at kind of the balance sheet. But if you wanted to look at January through December, whatever, it will give you the detail for whatever period of time you want to.
Thank you.
So anyway, so the comparative reports are nice in projecting, looking at what you had last year compared to this year, or if it says, oh, last year, we had this, but our expense this year is double.
So this says December 15th, 2020, or 2020, December 15th, 2019.
So compares the previous.
Yeah, this year and last year.
At that particular year.
At the end, yeah. And then the dollar change
So up
and
there
the
you
percent
just
change.
put in the year. Okay.
This is just the sample company that they give us on QuickBooks.
But it's helpful to look at either from income side or from the expenses to say, oh, why are our expenses up? Or looking at employee costs from one year to the next, those types of things that helps you kind of gauge or say, oh, or in a bigger company where, if somebody else.
And you want to do that because you want to see how
the change. And it could raise red flags, There's a bunch of something, is somebody writing checks out of your checkbook and they're putting them under a certain category? There's embezzling that goes on, more so than we'd like to see. But that's kind of helps you to say, well, this is way out of whack from prior years. Why is that? What's getting booked in here? Or have we really spent that much more on computer IT services than we did the year before, or whatever? And then also, do we have a slide for budget?
I did not.
Okay. The other thing you can do in here is you can put your budget in QuickBooks, and you can do a report, same thing with the P&L, and compare your actual to your budget. So then you can see where you are throughout the year. If you've kind of then broken it down either by month or in whole, where you are compared to what you thought you were going to do to compare where your actual results are. So it helps you in making those decisions. Yes, you can enter the budget.
We didn't do every year they change it, so we're going to.
But if you go under reports, you should be able to do, it might be under accounting. Is it under accounting? Budgets and forecasts.
Oh, did you see it?
One more
Yep,
down.
go down.
Down.
All the way.
Right above list, right below accounts and taxes. Go, there you go. There you go.
Yep, and then if you pull up budget to actual. And then you can do it. Yep, profit and loss.
Yes.
I would think so. And you can do it by month, or then you can do it by year, which maybe they didn't. Did they enter? Maybe they don't have anything entered in.
Yeah, they might. The sample company may not have had it.
But that's kind of gives you the gist of, then you can kind of see.
Mm-hmm.
Yeah,
Yeah, so if
absolutely.
you, there's a place to go in and enter your budget.
Right.
Right. You can. Yeah, that's the other thing with QuickBooks. Any of these reports you can export out into Excel, and then if you want to grab certain piece or do other cost, right? Yeah.
I mean, if you wanted to go over and just for an hour and just sit down, and that'd be great. Yeah. We're not gonna. I don't think we're gonna hit page.
So yeah. Any questions there so far? Have we lost anybody? You're still with us.
Everyone's ready to leave.
I know.
We're done. We're just getting to the fun stuff.
I know. Yeah.
Because we obviously get sort of checks for other clients. But there is periodically times during the day where we're trying to slice something in the company and we're like, oh, well, we need something for our house, and then purchase it all on the same thing. So when we open up, is that something where we open up on the draft and then put that?
Yeah. So you're entering up that receipt if, same thing, $90 was for supplies and $10 was something personal. Yep, owner draw.
So you can split it right on the check that you write.
Right, yeah, when you're entering that receipt, and then you don't have to go back through at the end of the year. Right, yeah. Absolutely. So the next thing that you can do in QuickBooks or Sage is you can subscribe to the payroll service if you have employees. I thought that was next, no?
We have a profit and loss by class. Can you just look at that for just a second?
Yeah,
I'm sorry.
I did skip that, sorry. So you can do, right, so you can do by class, which this guy, I guess he's got it by his types of different landscaping things that he likes to do. I see it a lot in my nonprofits that have different programs that they do, that they want to track revenue and the expenses for those certain things. Or rental properties. I've got people who have multiple rental properties, so they'll set up each rental property as a class. So you see your expenses and your income for that particular property, but it can all be on one QuickBooks. You don't have to have 20 QuickBook files to do 20 rental properties. So that's helpful to be able to do that. And then you can look at each class or property and see where income versus expenses to see which ones might be making you money, which ones you're not, which ones are costing you money, those types of things. So it's helpful as well. Bless you. All right, so payroll. So QuickBooks, you can subscribe to their payroll service. You can subscribe just to the payroll where it'll calculate your paychecks for you. They have the enhanced payroll where then you can go at the end of the quarter, really with a touch of buttons, create your payroll reports that you need to mail in. But if you go into the employee, when you go into the employee section, it walks you step by step. They fill out the W-4s and I-9s. You basically put in all that information, single, married, number of exemptions. Yeah. Yeah.
Just to
Employees.
show an employee.
I think you can probably just edit one if you want. So like here's where you would put in their personal information. You keep track of their hire dates, then their address and their payroll information. You can track in there when you give them raises, when pay rates change.
If you click on is it payroll info? Payroll info. That's where you would set up their taxes. If you click on taxes to the right-hand side, Lisa, sorry. whether they're claiming married, single, how many exemptions, so that QuickBooks would know how much to withhold for federal and state based on their W-4. So literally, when you open QuickBooks to make payroll for the week, it's basically employees, pay employees. It'll pop up your list. You click on who you're paying. It opens up a screen. Can you close that, Lisa? Sorry. I think, no, actually, just go back to the OK here. If you click the OK, does that get us out? So if you just open up the checking the 111002, double open that one, and then hit paycheck detail. Literally, you're entering the number of hours once this is set up, and it's calculating all of your taxes for you and keeping track of what you owe for your 941 deposits, your Vermont withholdings, or California withholdings, or whatever.
Well, is this easier or better than doing payroll matters, or is it different?
It's different. I mean, if you have a payroll company, that's what they're doing for you.
Right.
If you're doing your own payroll, you're managing that that event, whether it's weekly or bi-weekly. So you need to, create the paychecks, print them. Right, that's generating.
Right, yeah. Yeah, then you can print them out, print out their pay stubs, right? Yeah, and then do your deposits.
Can I ask a dumb question?
No
It's
questions,
just
no.
me, so I don't need
You do not need to do that. It's only if you have employees.
Okay, I sort of thought.
And that's where then if you don't have employees, you can keep the same version for as long as it still works.
So I
Versus
have
if you
that option if I need to.
Yeah. So if you have employees, you have to update QuickBooks every 2 years.
Can you do payroll, but do you figure out your own, all the withholding and the taxes and all of that? Why would you do that if somebody else can do it for you?
Cost. I mean, and that's what you look at, whether you're on a desktop version or the online version, at what the annual cost of that subscription is, whether you're having assisted payroll or you're doing it yourself. You look at, if you're not familiar and you can get assisted payroll and they take care of the taxes and the forms and everything for you for less than what it would cost for you to do it yourself and hire a professional to help you quarterly, that's when we look at what the cost to benefit is.
And even if you have somebody else doing it, you still have to enter that information into your QuickBooks to get those numbers.
So would there be a scenario where you did your own payroll and you figured out all of the withholding and the various taxes and you didn't hire additional help?
Right, if you didn't have the assisted payroll.
From your point of view, I mean, if you have 4 employees, just 4, do you think this is much cheaper? Probably, huh? You don't know?
We look at a case-by-case basis. We have some people that email us their hours, and we do their payroll, spit them back. What we'll do is we'll set up a QuickBooks file for them, spit them back their payroll checks so that they can write the checks. It really depends what the cost benefit is. And if we have people who can do it for cheaper, that's what we're going to suggest that they do that.
Or, then in some of the organizations, the people are like, well, I don't want to have to know how to do payroll reports and do the monthly 941 deposit and all that stuff. So, or don't have the staff to do that. So if you don't, right, that's where then a payroll service is nice of that aspect. But you still have to enter it into QuickBooks when you get the information as a journal entry or whatever.
But we could certainly look at your QuickBooks and say, what did you pay last year? What would it have cost? Are you capable of doing the reports yourself, or will you need help, and what that looks like.
But if all the information's in there, doesn't it just do a report?
Yeah, but you need to know if the report is correct before you.
And you have to pay for this, you have to pay for the payroll service in QuickBooks.
Yes, you're correct.
So it's not just a free part of your QuickBooks.
It is not part of
Used to be.
Yeah. So that's where the cost comparison.
That's where the cost, and it depends on how many employees you have.
Yeah.
And one other thing about paying. A lot of the features was this Sage that you were looking at?
No, this is desktop QuickBooks.
Oh, desktop. So the online one, like that 1099, if you wanted to put that is an extra. And there was something else that you were doing, so they nickel and dime you, huh?
You pay extra for that.
I only have like a handful, so I'm not going to pay for it. Time tracking. If you want a time tracking, you have to go, you pay for that. So
they get
it's
you one
expensive.
way or another.
Yeah. You have to decide,
But so once you want to go back to the slides, please. So once you do your payroll, then I think we've got a payroll summary. So it'll give you by employee, for whatever period in time you're looking for. This is what their wages, this is their withholdings, this is as the employer, what you're responsible for taxes. And then also the next screen, prints payroll liability balances that shows what's owed for the different taxes. And when you go into QuickBooks, you go pay payroll liabilities, and it'll bring up the screen for that payroll or that month if you're doing on a monthly basis, and you can just click them, make sure it all reconciles out to your reports. So QuickBooks has, as we kind of talked about, multiple levels. Enterprise is kind of the Mac Daddy manufacturing program, I would say. Your Premier probably offers a few more bells and whistles on here than your Pro does. And also has to do with how many users you may be wanting to be able to access it, because you can have multiple users accessing QuickBooks at the same time from multiple stations if your company's that big.
Two employees.
Two employees or just just you and your husband. So there's no employees. Right, so you're sole proprietors. Right. So you wouldn't even need the payroll version. So you're probably just really running your check register, trying to track income and expenses and receivables and payables. You're probably fine just to use Pro, which is the least expensive.
Okay.
Now, say we got to a point where we're going to upgrade, do we have to purchase the whole thing all over again?
Absolutely. No. You just upgrade. Yeah, you have to buy the subscription again. But again, if you're not doing it for payroll, if you don't have any employees, you're good for as long as you want to use it.
If you have one employee, can you still use the Pro version?
Oh, you can use the Pro. You just have to subscribe to the payroll subscription.
If you want them to do payroll.
Right. If you want to be able to calculate without doing it manually, if you want to be able to go in and use those payroll features that we just showed, you have to buy the payroll subscription. Otherwise, you got to figure it manually and then enter it.
But you could still have the Pro version and add the payroll
Correct.
subscription.
That's right. That's right. If you started with Pro and then you added employees, you could buy a payroll subscription to add to your Pro.
And apps. And you can, I have Pro, and the one thing that I would like is time tracking, but in order to get that, I'd have to go to Enterprise, and it's just me. So you can get an app for time tracking. Like a lot of apps will go into it. So sometimes if there's just one thing, sometimes you can get an app instead of upgrade.
Right.
Payroll, you can pay for an upgrade on Square.
Oh, okay.
Should look into that. I don't have it yet, but I've been researching it.
Okay. Thank you.
So yeah, and if you go to the Intuit website, it kind of will show you what the different programs offer. So the other program, which our disclaimer is, I don't know a lot about. I have one person, I think, client that still uses it. But I think it works. The workings are very similar to QuickBooks, but it's just Sage 50.
If you look at that home screen,
right.
Again, you've got checking, you've got customers, you've got vendors.
So I think the behind the scenes is pretty similar. I do know with Sage, it is a little more, probably more like a little more comprehensive general ledger program where you've got to go in and put if you want to be in May, you put May, you're in the period of May 1st to May 30th versus With QuickBooks, you don't have to tell it what you just, basically whatever screen you're on, if you're writing a check or a deposit, you put in the date that you're doing that, where in Sage, if you were doing stuff over multiple months, you've got to kind of log or be in that particular accounting period. But it does the same thing. You can do your payroll. It's going to give you your, what was it, banking? You want to flip to the next screen? Right, so it has your same chart of accounts, kind of looks very similar. You can do numbers. Do you have a choice not to do numbers? Do you know, Nicole? Do you guys do numbers? Numbers, okay. And same thing, your account register, things look pretty similar. So it's pretty much the same concepts kind of behind the scenes. You write your checks, you tell it what account you want it to go to, you do your payments, same thing with your credit cards, receive payments and vendors. All those things I think are pretty similar to the way QuickBooks works. The theory behind it all is the same.
Right. If you have payables, you're going to go vendor enter bills. If you have receivables, you're going to have customer create invoices. On any computerized accounting system that you're looking at, the more user-friendly, they're going to walk you through what you do. You have customer, you're going to create the invoice, you're going to receive the payment, you're going to make the deposit.
So I think that just kind of shows just kind of how some of their layouts work for their accounts payable, their aged payables. Same thing with their customers, where it kind of shows you that information, what you're entering a sales invoice looks like. You can do your viewed age receivable report. And your deposit, same thing, like where you reconcile, very similar. You're clicking off things that you're reconciling. And again, you can do your 1099s, get your report off from there as well. And the same thing, the financial statement's very similar.
This is a larger company that their sample company
Right.
was versus
Right.
Larry's Landscaping.
Right. So you have more accounts in there. But
And again, if you want to look at these, and if you go to, was it sage.com? Right, there's a sample company in there that you can play around with. Like we just called up Larry's Landscaping for QuickBooks. You can play around with that. And then, the QuickBooks demo so that you're comfortable with which one you're using. And like we said, 99% of our clients, if they're on a computerized accounting program, they're using QuickBooks.
Right.
What's the price point difference between Sage and QuickBooks?
Pretty close. Yeah, they're pretty close. I think Sage has moved to a monthly subscription or an annual subscription. You get an annual subscription. And I was thinking it was like $2.99 for the regular program, and I don't remember what the...
A little under 500 for the year.
Right. So they're very similar if you're adding. Yeah. So that's the assisted. Yeah. So, if you have the payroll component, you're probably at the $500 to $600 mark on an annual basis.
Yeah. So you've got we've talked mostly about the desktop versions, but you have your cloud computing now, which does give you flexibility, meaning you can be anywhere, anytime, pretty much, that you have.
Standing in the driveway.
Standing in the driveway, as long as you got Wi-Fi or data. And do things, disaster recovery, part of the online QuickBooks is, it's on their server, so, which they should have all their backups and recovery systems, so it's not so much that you have to worry about that anymore. The security of it, it's your login password, but it's on a server elsewhere, environmentally friendly, all those things. And then I think there's some apps, right? Mobile apps that work with probably QuickBooks and with Sage, where you can create estimates.
Capture the receipts.
Yeah, capture receipts, those things that I haven't used any of those, so I can't speak to those, but I do know I have got people that have done some of those things, so that make it user-friendly. So then
That might be the way to keep your PDF. I'd have to research that, but that may be if they're capturing that PDF, that copy of that invoice, that may be part of the computer accounting system, so that when you pop that open, I'll have to make a note of that and take a look. But if they're capturing that PDF of the receipt, it may be being stored with QuickBooks.
Does it ask you when you take the picture to capture that receipt, does it ask you for,
like,
I don't know. That's what.
Yeah, I haven't.
I'm just wondering if it is. I just saw that. I'm like, that might.
Right. Yeah, I haven't used that yet. But so the rest of this was kind of talking about QuickBooks Online. But do you have any other questions before we kind of go there? Since we're kind of running towards the end. I know
Yeah, this is a dummy question. Let's just say someone, hypothetically, got a QuickBooks 10 in a birthday stocking. Hasn't opened it. It's still in the box. Should be good. There's no. It's gonna confuse me as much as the new one.
You'll probably have to register it, and it probably won't register automatically because it's so old. So they'll give you a telephone number to call. They'll offer you an update, which I'm sure they will, but you'll have a program number and a license number on the CD, and as long as that hasn't been used, you'll register it, they'll give you a validation code, and you're good to go.
Can I put it in 2 different computers?
Theoretically, I think they say one computer, one laptop, but you should have a license for each one. I think when I was getting our office upgraded, they said I could put it on my desktop and my laptop for one license. So theoretically, you can't put it on 42 computers. That's what they told me, is when I was asking if I could put it on my desktop and my laptop, they said yes. So the one thing with you to be careful of if you both have separate desktops is if you're keeping it separate, you're going to overwrite each other's information unless you are storing it on one desktop that's accessible by 2.
Right. So it might be better if we did online.
That's why a lot of our people are going to the online version, just so that the accountant can log in. They have 3 people that are using it. Someone's in charge of, doing the budget. Someone's in charge of doing the payroll. Someone's in charge of doing the enter daily sales. Correct. Exactly. And that's what they're really pushing, is the user-friendly access information at any time online subscription. They also get you as an annual fee. but that's exactly what it is use. People can use it on the road. They can use it, driving with as long as they have access, they can do their
I can log in,
on
or you can give your account permission to log in, where I don't have to wait for you to email me a backup or to drop off a backup on a thumb drive, or to say, oh, I need to look at this, and so I can just jump in there.
So they can be both simultaneously work on the online version?
Yes.
So I can snap up over the sheet, it's each turn of page, she's going to ask.
So, me and my husband, we both have a laptop, so I do stuff from home. He can see what I'm doing, where he is, and then when I screw it up, Julie can see too.
But you can grant permission to your accountant so that Kate can stay on the other side of the phone, and I can turn it on and say, oh, ABC company, we've got that in here. It was $1.50 instead of $15, or something silly like that. But she can look at it, I can look at it, and Deb, we could all look at it together. You and your husband could work at the same time. Again, if you happen to just be entering checks and you're 3 months behind, and he could be entering a page and you could be entering a page theoretically. It's not the way we suggest, but. And we're sorry, we didn't make it. We're not public speakers, we're not educators, we're trying to give you a lot of information in a short period of time. So I do have cards up here. I'm happy to talk with any of you guys. Maybe if you want to shoot me an email, or if you want to come in and just chat for an hour, and just if you need some specific help, I'd be happy to. We'd be happy to.
Thank you.
Thank you.
They look a little glazed.
Before you go, you can't leave that door, go out that door. Your hall pass to get out of here is to fill out the evaluation form you have. Probably you'll get those phones, but you can't get out the door without them. One thing I did want to say, kind of a follow-up to something we talked about earlier, I'm scared to death, a number of you who say that you're operating as sole proprietors. Don't do that, please. You are leaving yourself open, particularly in the health service. You're leaving yourself up for so much liability, you don't even want to think about it. You have no firewall between your personal assets and your business. If you're a sole proprietor, something happens, somebody sues you, they're suing you, not your business, because you have not created a firewall. So please, don't do business as a sole proprietor.
So what are you suggesting you do instead?
An LLC or a corporation.
Yeah, we are actually an LLC.
Okay.
Yeah.
Good. You make me feel better.
Yeah.
Can it be a one-owner corporation?
Yeah, it's possible.
If you're a two-person LLC, however, you're filing a partnership tax return. You're not filing a sole proprietorship Schedule C.
Right.
But you can be as a one-person subchapter S or even a subchapter.